Hello traders, you're welcome to this video. In this video, we are going to be looking at how to identify highs and lows on your Forex chart. So to identify highs and lows in Forex trading, the goal is to understand where price tends to reverse or pause, marking key market turning points. Okay, so we're just going to be looking at a breakdown of a simple yet effective technique on how you can spot these levels and make informed trading decisions. Okay, now first of all, how do you identify swing highs and swing lows? As for swing highs, this is a peak where price goes up, then reverses to the downside. It consists of a high point with two lower highs on either side. So we have a swing high around here. Okay, get your point, price reverses, swing highs, lower highs on both sides. All right, now as for swing low, this is just the opposite, right? It's just the opposite. The swing low is the point where price drops to a low point before reversing upwards. Okay, before reversing upwards, and then it it has two higher lows on either side. So we can see high and swing high here, and two higher lows on either side. Now, how do you spot them? You look for sharp price movements that form a peak or a fall. A peak in the case of a swing high, a fall in the case of a swing low. Often seen clearly on a price chart. Okay, the candlestick price chart is what we are using. Now, how do you use price action to identify support and resistance levels? Support level is a price level where the market tends to reverse upwards, creating a low. We have a support level around here. Okay, after a decline, it creates a low. Okay, indicates strong buying interest. Now, as for resistance, we have a resistance level around here. Okay, it's a price level where the market tends to reverse downwards after creating a high, after rising. Okay, it indicates strong selling pressure, right? Now we use horizontal lines to mark our resistance level and our support level. Places where price repeatedly bounced off at least 2 points of rejections, at least 2 points. Okay, at least 2 points of rejections. Okay, now as for trend lines and channels, trend lines are lines that connect two or more swing highs or lows. Okay, so we have say we have this is a trend line, this is a trend line, right? Okay, now channels are parallel lines. We have it is trend lines that make up channels. Okay, channels are basically when you have you know you have your lines go up and down, moving in a somewhat parallel manner. So we had a channel around this point, but there was not exactly a channel here, right? If we had joined this to this, we wouldn't have had a channel anymore. It would have been giving us something like a wedge or a triangle. But around this point, we had a channel because the price was somehow parallel, although not perfectly parallel, but somehow parallel. So we had a channel within this area. Okay, now certain candlestick patterns, we also need to understand that candlestick patterns also play an important role. Certain candlestick patterns like the doji, the pin bars, or the engulfing patterns, they can signal reversals at highs and lows. So when you notice any of these important candlestick patterns around highs or lows, it can signal reversals. Okay, for example, we had a bearish engulfing around here, and we can see how price dropped all the way down to this point. So those important candlestick patterns can signal reversals. Okay, now Fibonacci retracement levels can also help to predict where price is likely to reverse. Fibonacci retracement levels, you can see that they are levels that it indicates the Fibonacci retracement tool indicates possible reversal levels. Okay, so it can also help. You might want to add them to your chart as well when you are trading based on highs and lows. Okay, now how do you use these techniques in combination? You might want to start by identifying the current trend. It's very important that you know the current trend. You look for swing highs and lows to determine whether the market is in an uptrend or a downtrend. For example, in this case, we had an uptrend because we are having consistent highs. We can see all the way up to this point before we had a break of structure. Now, you might also want to mark out support and resistance zones. Okay, you can identify this was a resistance zone, this was a support zone, right? We're going to mark out different zones because they're going to help you along the line, and then you can use trend lines for additional confirmation. So you mark out your trend lines so that you can get possible reversal zones. Okay, all these, they can help you identify entry zones, exit zones, possible reversal and continuation zones. And I want to wait for important candlestick patterns. Perhaps you can find a couple of candlestick patterns for me. They can also help you. All right, and then you add Fibonacci retracement to give you potential reversal zones, potential entry zones for continuations, and all of that. So basically, this is it. Identifying swing highs and lows aren't difficult at all, and even using it to trade, using it in combination of all these technical tools, the support and resistance levels, Fibonacci tools, candlestick patterns, and all of that can help you to better your trading decisions. I hope you found this video insightful. Kindly like and subscribe for more trading insights. Cheers and happy trading.